Introduction. SME funding lacuna happens due to contradiction between demand and supply of funds, unavailability to receive supply of finance from bank due to lack of qualified demand. It is only support by government as the government spend amount of money to give support in developing SMEs. Next, the objective of this article is discuss on funding lacunae in Malaysia by focusing between contradiction in SME financing between demand and supply side. The last one is policy responses to deal with funding issues. Section 2. The demand side perspective. The dimension of financial services based on Clason 2006. The first one is availability, that are financial services available and in what quantity. Second one, what total price are financial services available and range, type and quality of financial services offered. Based on Murdoch 1999, it is related to reliability, which means whether finance is available when needed. Next, convenience is easy. Continuity, which can finance be accessed repeatedly. And flexibility are products tailored to individual needs. Banks are reluctant to lend to small and medium-sized enterprise as they perceive them to be riskier clients, potentially providing insufficient profit margins and high transaction costs. Information asymmetry arises due to imperfect market conditions and low level of accountability of credit, compounded by poor bookkeeping records. Some argue that micro and small businesses have suffered from a lack of access to finance, leading to credit rationing by banks. Banks are reluctant to lend to SMEs as they perceive them as high risk, potentially providing insufficient profit margins and high transaction costs compared to larger firms. The second part of Section 2, the supply side perspective. From the supply side, the constraints include but are not limited to cost effectiveness of loan, opaqueness of borrowers, transaction costs, information, and lending technologies. So the first one, cost effectiveness. The higher the loan amount, the lower the lender's inspection cost per unit of loan, the lower the borrower's unit cost of providing information. It is filling out forms. The second one, information economics. Imperfections involved in small firm lending. The borrower has private information about the firm that the lender doesn't have. Incomplete information in terms of creditworthiness and interest rate evaluation. The third one is transaction cost. The cost of assessing and processing loan applications are identical for large and smaller loan. To reduce the fixed cost element arising from loan assessment, higher interest rate are used. Next, opaqueness. Information asymmetry on borrowers' repayment abilities increase bank risk of selecting borrowers. And the last one is lending technologies. Larger institutions have a comparative advantage in transaction lending based on hard information. Lastly, small enterprises have a comparative advantage in relationship lending based on soft information.
Section 3, SME funding lacuna in Malaysia, excess supply versus unfulfilled demand. In Malaysia, the SME sector has been one of the key drivers of the nation's economic growth. The SME sector has two important roles to play. Firstly, SMEs are the thrust of Malaysia's economic policy. Secondly, SMEs are the impetus for broad-based economic growth. 3.1 SME funding, unfulfilled demand. Policymakers and practitioners' experiences have revealed that SMEs are frequently constrained by limitations. They are limited in their ability to achieve economies of scale in the purchase of inputs such as equipment, raw materials, finance, and advisory services. Because of their small size, SMEs have limited access to functions such as training, market intelligence, logistics, and technology. As such, they are unable to take advantage of market opportunities that require large volumes, homogeneous standards, and regular supply. The Malaysian government has taken several initiatives to address weaknesses in this sector and ease limitations. In spite of the government's priorities and efforts, Certain segments of SME sectors continue to lament the lack of financing access, which is deemed a major challenge that hinders their growth and development. Most SMEs, only 13.4% rely on banks and 2.7% on development financial institutions to fund their business. According to studies, loan approvals and payouts takes more than 3 months for SMEs, and the time required increases for smaller loans. Smaller enterprises, as compared to larger enterprises in Malaysia, experience higher financing obstacles along the capital structure spectrum. In contrast, larger enterprises with better business plans, more reliable financial information, and larger assets have an easier time obtaining finance through traditional means. In the case of Malaysia, where funds availability is never an issue, the lenders have been left with a dilemma to fulfill their role both as profitable and developmental financiers. Rationing credit by limiting the loan amount or increasing interest rates are the solution to limit the risk of lenders.
Section 3.2, the discussion of SME access funds focuses on three key aspects. First, environment, second, risk, and the third one is transaction cost. Under environment aspect, the economic and business environment in Malaysia shapes the supply of funds to SMEs. Lending institutions worldwide operate within a regulated environment to ensure a smooth flow of funds from suppliers and demanders' side. Fragility of the financial system has stimulated central banks to a tighter supervision. Although loans are abundant across sectors with varied purposes, lack of quality information as to the bankability of the borrowers forces the credit supplier to institute standard best practice procedures. Under the risk aspect, the perception of the supplier of funds towards SMEs is one of the determinants of fund allocations to SMEs. The opaque nature of SME borrowers in Malaysia is not an exception when a financial institution enters a lending relationship. Formation of a SME special unit in Negara Malaysia further helps to speed up loan accessibility. This special unit is part of the ongoing efforts to ensure continued access to financing for viable SMEs across all sectors. It aims to provide information on various sources of financing available to the SMEs, facilitate SMEs in their loan application process, address difficulties faced in securing financing, and provide advisory services. And under transaction cost aspect, hard information about lending through the use of financial statements and fixed assets of borrowers are almost impossible in most Malaysian SME borrowers. Lenders have to complement hard information lending with the use of soft information technology, that is through the use of relationship lending approaches. This is due to the processing nature of loan applications and disbursement requirements. Enabling a speedier loan disbursement for small-sized loans among the SMEs borrower is also difficult.
As conclusions, since the demand side is frequently being discussed before in analysing SMEs' financing problems, this article filled the research gap by approaching the supply side to show what influenced the supply of funds to SMEs. This may help SMEs much more better if both sides, demand and supply, are equally discussed in order to reduce financing lacuna in SMEs. That's all from us. Thank you.